Hello everyone, Simon here with AvaTrade, and we're starting our weekly webinar with the title Your Weekly Trading Plan. So I want to welcome everyone back, and for those of you that are new, just a couple of words about what we do here. And I think the title says it all. Pretty much we're trying to make a plan for the week. As, um, as I always say, you plan your trade and then you trade your plan, and it works better as opposed to just randomly trading and picking things on the go. So this is the whole idea. And before we go any further, as usual, I'd like to read the risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you're more than welcome to visit our website for the full risk disclosure statement there. And this is some information how you can keep in touch with us. Of course, you can follow us on Twitter, and YouTube is a great source of educational material. We posting webinars there, tutorials, and a lot of information that you could find useful for yourself. And our usual agenda, we go through indices, Forex, commodities, and stocks. And before that, we try to see a big picture, what's happening, and try to get a general direction of the market or markets and see what's happening. So um, let's move on into general things, the big picture. And um, it looks like COVID is not the highlight anymore. Unfortunate events of war between Russia and Ukraine took all the highlights. And it is continuing. It's been more than a week now. It's the 10th day or 11th day of the war. People are dying. Very, very sad thing. Ukraine is getting a lot of international support, a lot of help, and so on. The only one thing they're pushing for, they still haven't gotten that. That's closing the skies over Ukraine, because apparently Ukraine is being bombed a lot by airplanes and so on, and they're really begging the international powers to help them with closing the sky. So this is the situation, and of course, huge sanctions been imposed on Russia. Russian stock market's been closed since the first day of the war, from the 28th of February. Some of you probably seen a lot of websites are posting one of the traders or analysts in Russia on TV. He was just drinking to pretty much the death of the local stock market, which haven't opened yet. As far as the calendar, so last week we were talking about a few things that had been happening. We had President Biden was speaking in front of the union, and then Powell, the chair of Federal Bank, he was speaking in front of Senate about the monetary policy. And Biden talked a lot about Ukraine and everything else, how things are. And Powell, after the speech of Powell, especially the first day, the market reacted in a positive way, because he assured everyone pretty much that the interest rate that's coming up in the meeting of 15, 16 of March, it's really soon, said that they're sticking, or they're planning to stick to a 0.25% raise. And let's see what happens there. And now then we had non-farm payrolls, and there was a surprise uptick there in the jobs. They were expecting 400,000 jobs, and they added 678,000 jobs. And also the unemployment rate improved. It went from it was 4 last month, and they expected 3.9. It came 3.8. So these are good numbers. And of course, the market went lower on the war news, as things are not getting any better there. And let's take a quick look on what's waiting for us as far as the economic calendar for this week. And again, um, I encourage all of you to look into economic calendars yourself and make note for the markets and countries and assets that you trade. What I do here, I just take the high impact announcements. That's why it fits on one page for me. So Monday we have retail sales from Germany. Tuesday, GDP numbers from European Union. Governor of Australian Bank is speaking on Tuesday. GDP numbers from Japan and CPI numbers from China. That's on Tuesday. On Thursday, we have a rate decision, interest rate decision, and the statement coming from European Union, the ECB, the European Central Bank, is reporting. And Thursday is very important data, the CPI numbers from the US. And the analysts are saying due to the war and the prices on oil and natural gas going higher, we might see super high inflation numbers this time. And that's why I said we'll see about the interest rate increase, because the current situation and the inflation rising and pretty bad perspectives, the Feds might change their mind and be more aggressive, but we don't know until it happens. Also, we have the press conference following the interest rate decisions from ECB. We have another speech from Governor of Australian Bank, Central Bank, and Friday we have CPI numbers from Germany, employment data from Canada, and Michigan Consumer Sentiment Index, which is also important to see how the consumers are feeling about how things are going. So these are the things for the upcoming week. And what we'll do now, we're going to switch to the MT4 and look at the instrument, specific instruments, and see how they do. So I would like to start with a super crazy chart just to see how intense things are. This is wheat, okay? And we've been talking pretty much. I've been talking about soft commodities every week. We had a meeting, and earlier we spoke that Barron's has said that this is the year for soft commodities because they said the energy prices are high and so on, but nobody really foreseed the war, and this is what's happening with the war. Take a look. This is the first day. This is the first day of the war. The 28th. Sorry, it started on the 24th. So the 24th, the price went higher, and the first reaction of the traders said, okay, this is not real, we're going to sell it. And the price went down, and since then it was just up and not stopping. Okay, it's something that the traders call the limit up, when it's really, really hard to get any of these futures, because as you know, these are the CFDs that we're talking about, but it's covered by the futures. And take a look, 1, 2, 3 gaps and closing at the highs. So just to give you the numbers and the reason why the wheat is so strong, both Russia and Ukraine are the biggest exporters. I think Russia is the biggest exporter of wheat, and 17% of the global trade on wheat comes from Russia, and 12% comes from Ukraine, and that's according to Bank of America. So as we know now, everything is interrupted. The war is going on, and there's a big threat of a huge shortage of this commodity. So the wheat is the strongest. Corn is also strong, not as strong as wheat, but also moving up, or as again, those countries are exporters of this commodity. Now, soybean is nothing much happening here because it's not really involved with the conflict, I believe. It's still holding up. So these are the soft commodities that are being affected. Of course, we'll take a look at oil. Now, with all the sanctions and all the squeezing that's happening against Russia, against the actions in Ukraine, the U.S. is still buying Russian oil, and the prices are going through the skies. We had on Thursday, on the 3rd of March, the price hit 116.51. This is the level of 2008. And then it went lower. It was a little bit profit taking. And then on Friday, we almost hit that level, closing at 115. Still super high. And the gasoline prices at the gas station in the States, they hit a super high level. The average price is $3.84, and that's the level of September 2012. So a lot of pressure on inflation. Of course, the prices, the energy prices are going higher. So again, I don't want to look smart and say that I know what's going to happen or whatever. We really don't know. It all depends how this situation with war goes on, and I hope that it finishes soon. I hope things will start getting closer to normal. It's very hard to get back to normal with all the destructions and pain and death and everything else. But we really don't know. So in a simple way, if we're going higher, we need to break the high of 116.51. Let's see what happens. I think it all depends what's next in the situation with the war. Natural gas also moved higher. We almost touched 5. I believe we did high here. Yes, 504, and we closed below 5 a little bit. This commodity might continue higher because even without the war, take a look. The recent prices on natural gas were much higher than we are now. For instance, February we had the move to 557, and then we sold out. So there's a big chance that we'll go revisit these price levels over here. Now, two commodities that Russia is also a big exporter of, and I think I'm not sure if I mentioned last week, but Palladium also skyrocketing. And we are in the really key levels here. This is the weekly chart of Palladium, and the high here was 3006.7, and it could be that we might hit that level and then see if we bounce back or break through it. So a big pressure to the upside. It's similar to what we saw on wheat. Take a look. It just straight going higher, and copper as well. It's been going higher straight. Let's see if we have any levels here. We broke from the previous high here, which was 488.45. We closed at 491, and potentially we could continue going higher on copper. So again, as far as commodities, we're going to wrap up commodities here. The strongest moves were in wheat and copper, crude oil, natural gas, of course, and palladium. So those are the commodities that directly connected to what's happening in this situation with the war between Russia and Ukraine. So let's move on to equity markets. And well, before we do that, I forgot to mention gold. And there are a few articles actually they're talking about that due to the war now it's a real test of the safe haven, and they're comparing gold with Bitcoin. As a lot of analysts were comparing them, they said that the Bitcoin is a new gold and it could be the safe haven. And let's just see what happens. So gold made initial move higher. This is in the beginning of the war on the 24th. We went as high as 1974.31, and Friday we were trying to confirm that level. We're a little bit short of that level. We were as high as 1970.69, and we closed pretty much at the highs. And let's see if the Bitcoin really having the similar effect. Not really. So in the beginning of the war, it actually started to move higher. We hit about 45,000, and in the past few days was sold out. So not really competitive with gold, as we can see. So gold remains a safe haven, as you could see, and historically we know with every war the gold was going higher as a commodity, as a safe haven. As it makes sense, because if you have to flee your country, again we're talking about electronic trading here and so on, but in a simple way, back in the day, uh, gold was the commodity. So people really had physical gold, physical coins, and they could travel and go to any part of the world and then use that to buy food, to say it in a simple way. So gold remains a commodity that is still a safe haven. So let's move to indices, to equity markets. And as far as indices, of course, the war is taking place in Europe. So European indices are getting pretty much smashed. As we said, the Russian market is closed. According to some, it's it might not open ever. I really don't know. I'm not going to speculate on that. But Russian companies that they lost tons of money. The oligarchs are panicking and so on. We're not going to go into that. But let's take a look at the European indices. We start with DAX. DAX is just a free dive, free fall. And it looks like we're coming to certain levels from which we, last time we started this recent move higher. So let's see if we're holding here, 13,000 psychological level on DAX. We did hit below it and close a little bit above. So let's see how this week plays out. And again, I hope the good news will come out and things will start recovering. FTSE, similar idea. We came to the previous support here before this move. Also, the French index is very weak as well. But take a look, all of them, they coming. They stopped on Friday, closed the week on pretty much very strategic levels. Take a look. This was the resistance from which we had a high, really strong fall in 2020. Then we recovered, and then over here we retested. This is the weekly chart, right? We retested it and went higher, making a higher highs, higher lows, and then the recent drop came straight to this level, and that's 6,091. So again, we might hold this level, and again, if things get worse, I hope not, and we start really seeing some price action closing below this level of 6,091 or 6,100, and we see some daily candles closing or bars closing below it, we might see a continuation to the downside, because the war doesn't make anybody happy, and it hits the economy, as all those countries, they provide a lot of help to Ukraine, some Eastern European countries, and Germany as well. They accept a lot of people that are running away from these terrible circumstances of the war from Ukraine. So these are the European indices. They're pretty weak. Let's take a look at Nikkei. The Asian market is also selling off here. This is Nifty. Also came to the level that we might see some kind of support. We're close to it. And U.S. indices. Let's take a look at them, what they do. So S&P 500. There's a lot of actions going on with a lot of tails, and it tells you that really market is not sure which way to go. We're definitely facing strong resistance from around 4,400. We had few attempts breaking to the upside. Friday was the low, and again, one of the strategies that the traders are using, that the Thursday Friday strategy, when the Friday closes below Thursday, that in most cases Monday will continue that direction. In this case is lower, so that could be the case. And if we take a look at the weekly chart, we actually had an up week overall. But let's see what's next. The key level from which we really bounce here, let's take a look, is around here. This is the strong support that we had, and the low here was 4,126. So we broke through it a little bit the previous week, and now we're holding to the upside. So if we are going lower, we need to retest this level around 4100, see if we hold. And similar to European indices, if we start closing below here, we might start tipping over and continuing to the downside. Dow Jones, similar idea, flat week pretty much. And on the daily chart, we are having a lot of tails, very choppy trading. And Nasdaq had similar moves. And take a look over here. The previous week low was confirming the week before, and this week we a little bit low. Now, just to tell you something to do with sanctions, and we're going to move to individual stocks. A lot of big companies pulling out of Moscow, and it's logical that the bottom line is going to be affected. So, for instance, Apple is not selling any products, and it closed all these stores in Russia. So this is something to see for the upcoming days and weeks. Definitely, Russia, it's a huge market. It's a huge country with a lot of consumers that like iPhones. And logically speaking, it will affect Apple for sure. Microsoft, the same thing. They don't sell any new products, don't give new services to Russia. So of course the stock will be affected. They already pulled in since the announcements of the sanctions. Boeing, similar idea. Most of the countries don't let Russians fly to those countries, and I think Boeing is not supporting the airplanes. It's not going to do parts and services. So I guess the stock will be affected as well, and it's already reflecting it on the market. So again, big companies, they do business with Russia, they will be affected. They will, of course, report lower profits and so on. And we'll see how it really reflects in the upcoming days and weeks. Now, let's take a look at Forex market, and we start with dollar index. Okay, so I spoke about it, and every week we talk about 96 level. This is the dollar index, and I said that the closer we're getting to interest rate decision, the dollar is getting strength. And of course, with the beginning of the war, dollar has been very, very strong. And take a look. This is the Friday move, and on Friday we almost hit 99, 98.93. And if you zoom out and see the weekly chart or even the monthly chart, we're really at the key levels here. And I guess it will be logical that if we establish 99, this is the level where we stop this move over here. The high here was 99.31. So if we're going higher and we start establishing some price action above this level, the 100 mark is the next. And the recent high was, you see, we had a double top here. This is the weekly chart. So this move was on 2016 in December, and the high here was 103.6. And let's see what this level was here. And this was 103.8. But after this huge spike, it was a failed attempt to go higher, and then we pulled in. So after a double bottom here, we're really moving higher. And I think 99 is the next level to conquer. And if we are closing above it, again, 100, and we should go higher potentially. So let's take a look at specific pairs. And of course, ruble is insane. We're not going to even go into it. And Turkish lira. Turkish lira, after being glued to this level, actually made a move. And now after this advanced move, it is holding up. So inflation in Turkey is, I think, at a 20-year high situation that is not that great. So let's see if this move is sustainable. Just to remind you, this was real. And we might continue slowly going higher here, or we might come and retest the 1348, but so far it looks strong. USD ZAR, Another one that it's kind of holding this 15.5 level roughly. Every spike is really being rejected by this level, and we are in a very tight range here between 15 and 15.5. So the moment we break out of it and start establishing some price action about the level, it might start the move higher. And as of now, it's a good action for the swing traders or for the day traders or for scalpers as we're trading within the channel. So there are clear levels of support and resistance to work with. So I guess they're loving it at this situation. But for the longer term trading or for direction, we need to break either to the upside and establish some support, or to the downside and establish the resistance. Now, as far as the major ones, euro and pound are very weak, and let's take a look at them. Euro is really, really selling, and take a look at the weekly chart, see where we are. We're really approaching the 108 area from where we had a tough fight between the bears and the bulls. We closed at 109.34 with a strong falling here. Let's see what's next for euro. I guess if we are continuing, we might look for some confirmation of this support over here. And there was 108, 107.99. So 108 roughly is a level that could play a strong role of support. British pound is not as weak, but it is to the downside. But we are holding. Last time we held very strong this level here around 130, 170, and we're still not retesting it. Now, Australian and New Zealand dollar are very strong, and I think it's to do with commodities that those countries sell. And it's been really, really holding up, even though the strong dollar is in place. But it looks like commodity currency, and that's what they are. The New Zealand and Australian dollar, they call them commodity because they sell a lot of things as far as commodities. So they are holding up strongly. Dollar yen is another safe haven. So even on the strength of a dollar, yen is stronger than US dollar. So again, gold and yen are major safe havens there. And let's take a look at another one, the Swiss franc as well. So it's the third one. If you read or try to get information, it's a classical for a while. The Japanese yen, Swiss franc, and gold are the safe havens in case the equity markets are going south. That means selling. So they remained playing this role. And USD Cad, if you take a look at USD Cad, even though the dollar is strong, but because of the oil prices and Canadian dollar pretty much having a big correlation with oil prices, so it's pretty much flat. It's kind of a war. US dollar is strong, but Canadian is getting strength for the oil prices, so it's pretty much flat. If you don't count the spikes, open and close pretty much on the same level. So this is the weekly chart, right? If you look at the daily chart, with all these actions, if you can see pretty much in the same area. So something needs to happen here in order to move. And again, the group of Japanese yen connected currencies, as you said, the Australian dollar and New Zealand dollar strong. So Euro JPY is super weak, GBP super weak, and Swiss franc not that much. But if you take a look at Australian, it's holding up against the yen. As we said, they're really strong as commodity currencies. Okay, so let's just put it all together and see what we spoke about today. We spoke about the situation, the war situation is going on. It affects everything, and we spoke about commodities that are affected the most. That's the wheat, palladium, oil and natural gas, corn as well. And we spoke about the equities. They have a strong pressure to the downside, especially European equities. European indices are suffering the most on this situation. And This week we have inflation numbers that will be affecting, of course, the decision of the Fed that's coming in the middle of this month. And as far as the currency, dollar is super strong, and the safe havens remained Australian dollar, Japanese yen, Swiss franc, and gold is super strong. So I wish everyone a great week, successful week. Stay safe, stay healthy, and we'll see you next week. All the best.